Warren Buffett just bought this stock. Cosmetic company Ulta Beauty jumped 11% yesterday on news that Warren Buffett's business Berkshire Hathaway had purchased almost 700,000 shares. So what does Warren Buffett see in Ulta Beauty? At the latest price, Ulta now has a market cap of $17.8 billion. With $525 million of cash on the balance sheet and no debt, the enterprise value is $17.3 billion. Revenue over the last 12 months comes to $11.3 billion, with $1.26 billion of net income, $1.9 billion of adjusted EBITDA, and $914 million of free cash flow. So Ulta stock is now valued at 14 times earnings, 19 times free cash flow, and 8.9 times EBITDA. That PE ratio is right at the bottom of the company's historical range. And that low valuation is because Ulta is not performing as well as in the past. Same-store sales in the first quarter rose just 1.6% year over year. Ulta then cut its full-year outlook to just 2 to 3% growth. That guidance requires a significant improvement in the second half of the year, which isn't guaranteed. This kind of growth is much lower than investors have come to expect from Ulta. Before the pandemic, the company had an average revenue growth rate of almost 20%. One factor behind the decline is the rise of Sephora, which is owned by LVMH. A partnership with department store Kohl's dramatically expanded Sephora's reach in the US to over 1,000 stores. Even Ulta CEO Dave Kimball said that the addition of so many points of distribution was unprecedented. Kohl's says that sales from Sephora shops rose 90% in 2023 to over $1.4 billion and expects more than $2 billion next year. Combine that with the performance of fast-growing brand Ulta Beauty, and it's easy to see how Ulta has experienced pressure on sales. But despite the increase in competition, there's a chance the market is overreacting. The cosmetics industry is a resilient and growing market, and Ulta's profits are holding up reasonably well. Meanwhile, Kohl's expects to finish the year with just over 1,000 Sephora shops. Considering there are only 1,165 Kohl's in the US, the rapid growth in Sephora shops is set to slow down considerably from here, and that should relieve some pressure on Ulta. Meanwhile, Ulta Beauty has a growing membership program and plans to expand into Mexico. Management also said that they're seeing promising signs from a move into the luxury category. Let's assume Ulta can get its annual revenue growth rate back up to 10% for the next 10 years, while operating with a 9% free cash flow margin, both figures that are below historical averages. Using a discounted cash flow model with a discount rate of 10% and a 2.5% terminal rate, I get an expected annualized return of 12.7%. That's not bad, and it looks like Buffett bought the shares slightly higher than where they are now, so there's still time to get in on this stock. But these are my personal opinions, not financial advice, and I hold no position in Ulta. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.